What do you now think is going to happen this month, next month, and so on?
Kelly, Steve, I think there are many within the Fed that now look back on that September half-point cut and think that they moved too quickly. And I agree with Steve. It might be more difficult for the chairman to forge a consensus in a week and a half time. There was something for everybody in the job news this morning. I don't know that that's going to win the day. Probably more impactful is the inflation news, which seems a little stuck. We had made good progress, and now we're beginning to see even the slightest tick up, but 2% is still a little ways off. And so I think that's probably going to cause some of the voters to pause a little bit. I would just note that, Steve, interest rates are still well above what most of us think neutral is. And taking out an insurance policy against rising unemployment is probably in the order. Many of the statements, as I see them today, are really positioning for what might happen in the first quarter of the year, where both fundamentals and the prospective agenda from the incoming administration might make folks less comfortable about the inflation picture.
In other words, Carl, they're going to cut in like 2 weeks' time, you think?
I think that's almost a certainty. I think it'll be very interesting when we get the economic projections, not just in the dot chart, to see how they're thinking going forward. I'll almost go straight to the dots, Steve. I look at the balance of risks at the back of the pack. There had been a big shift in inflation perceptions in September from June, where people had gotten more comfortable with the outlook. I'm wondering whether that'll shift back a little bit again because of the data that we've gotten and the policies that might be in front of us.
So there's a couple things I think that the doves have in their pocket, and they're not definitive, but one is this notion that the housing numbers will be coming down. That is supposed to be happening. It should have happened already. There was some let up in the rate of housing inflation or the rental inflation as in. The other one is this idea that if you remember, Kelly, we had a big bump in inflation at the beginning of this year. Mm-hmm. It'll soon be last year.
Right.
It'll be last year. And that will mean the comps will be better.
Yeah.
So that will help a little bit going forward. I think if you step back and you say to yourself, okay, do we need a 4.25%, what's to call 4.5% funds rate with inflation even at 3%? I don't think that's the case. If it's 3% and rising, that's another problem. But within the tolerance here, I think when Powell talked about recalibration, I think he talked about bringing the rate down in order to put it at a level where the Fed was in a better place to respond to whatever happened to the economy that was otherwise too high. And one more thing I'll point out, which is that Wall Street and companies that finance at Wall Street get the funds rate that the Fed is going to deliver. Main Street gets the rate that the Fed is offering now. And so if you're a small business, if you're in the mortgage market, you are paying high rates. And you can cut the rate and Wall Street will get that future. But if you don't cut it, then everybody is stuck where they are.
And Carl, not to also add an element here, but because of what's been happening in stocks and in crypto, do you think that the Fed will or should take that into account as possibly meriting tighter policy rather than looser policy right now?
Kelly, as you know, they do look at financial conditions, and individually and on a composite basis, they are well into easy territory. Even the Fed's own index, which takes a look at bank lending conditions and long-term interest rates, that is now on the easy side of neutral. It doesn't appear that capital is hard to get for most borrowers. And Steve, I keep coming back to we have a 3% real economy in the United States right now, and consumption's pretty strong. So the risk that consumption will keep the upward pressure on prices is there.